Warren Buffett, the Oracle of Omaha. Known for his folksy wisdom and unparalleled investment acumen, Buffett has become a household name not just in the financial world, but across the globe. His investment strategies and decisions are scrutinized by millions, and his annual letters to shareholders are considered must-reads for anyone interested in finance. A legend in the investment world. Buffett's journey from a young boy with a paper route to one of the richest men on the planet is nothing short of inspirational. His company, Berkshire Hathaway, has grown from a struggling textile mill into a massive conglomerate with interests in everything from insurance to railroads to candy. When Buffett speaks, people listen. His words have the power to move markets, and his investment choices are often seen as a barometer for the health of the economy. Whether he's discussing the merits of a particular stock or offering his views on the broader market, investors hang on his every word. And when he makes a move, the market takes notice. His recent decisions have been no exception. In the past few months, Buffett has made several high-profile buys and sells that have left analysts and investors alike scrambling to understand his strategy. Recently, Buffett has been shaking things up with some big buys and sells. These moves have sparked a lot of discussions and debates in the financial community. Some see them as a sign of Buffett adapting to a changing market, while others believe he's sticking to his tried-and-true principles. These moves offer valuable insights for investors of all levels. By examining Buffett's recent actions, we can glean important lessons about value investing, market timing, and the importance of patience and discipline in building wealth. So, let's break down what Buffett's been up to and what it means for your portfolio. Understanding his strategy can help you make more informed decisions and potentially improve your own investment outcomes. Buffett's investment philosophy is all about finding value where others don't. He looks for companies with strong fundamentals that are trading below their intrinsic value. This approach, known as value investing, has been the cornerstone of his success. He's a long-term investor, not interested in quick flips or chasing the latest fads. Buffett's patience and discipline have allowed him to weather market downturns and come out ahead in the long run. His focus is always on the big picture, and he encourages other investors to do the same. His recent moves reflect this core principle. Buy undervalued companies with strong fundamentals and hold them for the long haul. By staying true to his philosophy, Buffett has continued to generate impressive returns for Berkshire Hathaway's shareholders, proving that his approach is as relevant today as it was when he first started investing. One of Buffett's most notable recent moves was his investment in a major technology company. This surprised many, as Buffett has traditionally been wary of tech stocks. However, he saw an opportunity to buy a great company at a reasonable price, and he took it. This decision underscores Buffett's ability to adapt and evolve. While he remains committed to his core principles, he's not afraid to venture into new areas if he believes the potential rewards justify the risks. This flexibility is one of the reasons he's been so successful over the years. Another significant move was his decision to sell a large portion of his holdings in a major financial institution. This raised eyebrows, as Buffett has long been a proponent of the banking sector. However, he believed that the risks associated with this particular investment had increased, and he chose to reallocate his capital elsewhere. This move highlights the importance of risk management in investing. Even the best investors need to reassess their positions and make adjustments when necessary. Buffett's willingness to make tough decisions, even if they go against his previous convictions, is a testament to his disciplined approach. In conclusion, Warren Buffett's recent moves offer a wealth of insights for investors. By studying his actions and understanding the rationale behind them, we can learn valuable lessons about value investing, risk management, and the importance of staying true to one's principles. Whether you're a seasoned investor or just starting out, there's much to be gained from following the Oracle of Omaha's lead. Let's start with the sales. Buffett has been trimming his stake in Apple, a stock that was once a cornerstone of his portfolio. Why? It might seem counterintuitive. Apple is a giant, a tech behemoth, but even giants can become overpriced. Buffett is also reducing his exposure to Bank of America. The financial sector can be volatile, especially with interest rate hikes and economic uncertainty looming. This move suggests a cautious approach to a sector that could be in for a bumpy ride. Now let's talk about the buys. In the world of investing, few names carry as much weight as Warren Buffett. Known for his keen eye for value and his long-term investment strategies, Buffett's moves are closely watched by investors around the globe. Recently, one of his significant investments has been in Occidental Petroleum, a company that might not immediately come to mind when thinking about the future of energy. So, why is Buffett so interested in this oil and gas giant? Buffett has been pouring money into Occidental Petroleum. This isn't just a small stake, it's a substantial investment that signals his confidence in the company's potential. Occidental Petroleum, often referred to as Oxy, is one of the largest oil and gas companies in the United States. With operations spanning across the globe, Oxy has a significant presence in the energy sector. But what makes this investment particularly interesting is the timing and the context in which it is happening. This might seem surprising to some. After all, the global narrative is increasingly focused on renewable energy sources and reducing carbon emissions. Many investors are shifting their portfolios towards green energy companies, betting on the future of wind, solar, and electric vehicles. So, why would Buffett, a seasoned investor known for his forward-thinking approach, choose to invest heavily in a traditional oil and gas company? The world is moving towards green energy, right? Indeed, the push for renewable energy is stronger than ever. Governments and corporations worldwide are investing billions into green technologies, aiming to reduce their carbon footprints and combat climate change. Wind turbines, solar panels, and electric cars are becoming more common, and the transition to a more sustainable energy future seems inevitable. However, the reality is that this transition will take time, and traditional energy sources will still play a crucial role in the global economy for years to come. But Buffett sees value in the oil and gas sector, at least for the foreseeable future. He understands that while the world is moving towards renewable energy, the demand for oil and gas is not going to disappear overnight. In fact, these resources will continue to be essential for various industries, including transportation, manufacturing, and even the production of renewable energy infrastructure. By investing in Occidental Petroleum, Buffett is positioning himself to benefit from the ongoing demand for oil and gas, while also keeping an eye on the company's potential to adapt and innovate. Occidental is undervalued and has strong cash flow. This makes it an attractive investment for someone like Buffett, who looks for companies with solid financials and the potential for long-term growth. Oxy's strong cash flow allows it to invest in new technologies and expand its operations, ensuring that it remains competitive in the ever-evolving energy market. Additionally, the company's current valuation presents an opportunity for significant returns as the market recognizes its true potential. They are also making strides in carbon capture technology, which could be a game-changer in a world trying to reduce its carbon footprint. Carbon capture and storage, CCS, is a technology that captures carbon dioxide emissions from sources like power plants and industrial processes, preventing them from entering the atmosphere. Occidental is at the forefront of this technology, investing heavily in research and development to make CCS more efficient and cost-effective. If successful, this could not only help reduce global carbon emissions, but also provide a new revenue stream for the company. This investment shows that Buffett is willing to bet on traditional industries with the potential for growth and adaptation. By investing in Occidental Petroleum, he is not only banking on the continued demand for oil and gas, but also on the company's ability to innovate and lead in new technologies like carbon capture. It's a strategic move that highlights Buffett's belief in the importance of balancing traditional energy investments with the potential for future advancements. In the end, it's a calculated risk that could pay off handsomely as the world navigates the complex transition to a more sustainable energy future. Buffett is also buying into Sirius XM, the satellite radio giant. It's been a rough year for the company, but Buffett sees its strong cash flow and market dominance as signs of long-term potential. Then there's VeriSign, a company that manages internet domain names. This is a bet on the continued growth of the internet. VeriSign has a virtual monopoly on a critical piece of online infrastructure. These moves, taken together, paint a clear picture of Buffett's investment strategy: value investing. Value investing is a strategy where investors look for stocks that are undervalued by the market. The goal is to find companies that are trading for less than their intrinsic value. This approach requires patience, discipline, and a keen eye for detail. What does that mean? Well, imagine you're at a flea market. You're surrounded by countless items, some of which are hidden gems waiting to be discovered. The key is to identify those items that are worth more than their price tag suggests. You're sifting through piles of stuff, looking for hidden treasures. It's not about picking up every shiny object you see, but rather about discerning which items have true value. This requires a deep understanding of what you're looking for and the ability to recognize quality when you see it. That's what value investing is all about. Finding those diamonds in the rough, those undervalued companies with solid fundamentals and growth potential. It's about doing your homework, analyzing financial statements, understanding the business model, and assessing the management team. It's a meticulous process that involves a lot of research and due diligence. Buffett looks for companies with a wide moat, a competitive advantage that makes it hard for others to compete. This moat could be in the form of brand recognition, patents, or a unique business model. The idea is to find companies that can maintain their competitive edge over the long term. Think of it like a castle. A castle with a wide moat is well protected from invaders. Similarly, a company with a wide moat is well protected from competitors. This protection allows the company to generate consistent profits and grow over time. The wider the moat, the more protected the castle and your investment is. This means that the company is more likely to withstand economic downturns and competitive pressures. As a value investor, your goal is to find these well-protected companies and invest in them for the long haul. By doing so, you can build a portfolio that not only grows in value but also provides a measure of safety and stability. Contrarian investing, zigging when others zag. Buffett is also a contrarian investor. He's not afraid to go against the grain. When everyone else is selling, he's looking for buying opportunities. When everyone's chasing the latest fad, he's sticking to his guns, focusing on solid, undervalued companies. This contrarian approach can be unsettling for some investors. It requires patience, discipline, and a strong stomach. But it's a strategy that has served Buffett well over the decades. One more thing to note: Buffett loves cash. He always keeps a hefty pile of it on hand. Why? Because cash gives him flexibility. He can swoop in and buy when everyone else is panicking. Cash is king, especially in times of uncertainty. It's like having an emergency fund for your portfolio. The key takeaway from all of this is that Buffett is playing the long game. He's not interested in short-term gains. He's planting seeds that he expects to grow into mighty oaks decades from now. This long-term vision is crucial for all investors, not just billionaires like Buffett. The Oracle's wisdom lessons for every investor. So, what can we learn from the Oracle of Omaha? First, don't be afraid to go against the herd. Second, cash is king. Keep some powder dry. Third, think long-term. Invest in companies you believe in and hold them for the long haul. And finally, remember, you don't have to be a billionaire to invest like one.